Hello, and welcome to PremiumBytes, where we shine a light on the unsung world of insurance technology leaders. I am Sudhar Krishnamachary, one of your co-hosts, and with Samir Ahmed, our other co-host, we're here to have meaningful conversations about the evolving technology landscape inside the insurance industry. Let's acknowledge it. Being an insurance firm CIO or Chief Information Officer is one of the toughest leadership roles in today's world. You've got a risk-averse mindset baked into the very fabric of the industry, a legacy estate that must complement the modern tech, and a talent crisis from both the retiring side and next-gen recruiting side. And then you got the slower pace of innovation. We see it because we're right there in the trenches with you as consultants day in and day out. Our mission is to deep dive, have conversations that carry substance, offer practical insights, and help you validate and navigate the relevant challenges of being an effective CIO in the insurance sector. So thank you for joining us on this adventure. Let's jump right into our next conversation.
Hey Sudhar, how are you doing?
I'm doing great. Welcome back.
Yeah, welcome back to you as well.
Yeah, so looking forward to this discussion, but as always, opening up with a big thank you for our audience for the continued support. I think we're into the 2-digit count of episodes with this, and I think you and I should be grateful for the audience support and the continued engagement and the inspiration that we have to continue to produce this.
Yeah, absolutely. All of this is for the audience, so wouldn't be doing it without their support for sure. And we're episode 12 here. Not sure who all sort of you was able to listen to or watch our last episode. It was continuation of our arc on cyber. We had a CIO as a former CIO as a guest, and he sort of spoke about his actual experience going through a ransomware incident. So really interesting conversation. I'd recommend that if you haven't heard it so far, please do take a listen or watch it. But,
that's
what are we doing today?
Today we're teeing up a fairly interesting topic, and I expect some eye rolls, if not anything more or worse than that. But today we're teeing up blockchain and insurance, and that's interestingly knowing that it is a well-known fact in the insurance, at least insurance technology leadership community, that it hasn't gained a whole lot of traction or delivered on any of its promises. But still,
yeah. So I mean, if that's the case, then why are we talking about it?
Especially now, right? But I think, listen, I think you're on the conference circuit, and I've been to a few so far this year. We're also keeping in a tab on the InsurTech community. So I don't think it's a dead horse. I think it's enduring, and it's active in one way or the other. Maybe somewhat a lower quality and quantity in the carrier community, but on the innovation and the InsurTech community, I feel like it's still fully alive and not a dead horse. You may have a different view.
No, I would agree with that. It's definitely not a dead horse or a dead topic. The intensity has died down for sure, and of course, AI has unseated blockchain. But it's still there, and like you said, the topic sort of is enduring, and so perhaps that's something we can discuss, right? That instead of talking about the technology itself and anything around that, to me, this is the more interesting aspect. That, well, why hasn't it become mainstream, and why doesn't it go away? So it's kind of just stuck in limbo. So that I think would be worth making the focus of our chat.
I think so, Samir. I think I'm jokingly thinking that you guys are going to talk about blockchain and insurance. I'm going to just pause this podcast right here and move on. No, actually, Samir and I were very thoughtful about what would be a worthwhile discussion for the next 20-25 minutes or so. Would be not recogitate what you might already know, but at least hit on, what are some of the thematic nuances in insurance that is interesting and perhaps validating and reassuring, but also will probably be the reason why it'll come back and maybe resurrect at a future point. So that's what we're going to do. But if anyone in the audience feels differently, either strongly that it is a dead horse or strongly that, hey, no, carriers are gung ho about it, we'd love to hear from you and perhaps even do a follow up based on your engagement with us. So with that, let's just dig in and deep dive here.
Yeah, let's do it.
So I'm going to just make a very general statement, Samir, and you can kind of opine on it. Blockchain remains expensive, inefficient, and ineffective from a traditional insurer's perspective. And I think it promises have gloriously failed to resonate with the insurers tech community. And there are reasons that are unique to insurance on why it has failed. But do you agree or not agree? And if so, why?
Yeah, so I have the typical kind of consultant, reaction to this. That I think parts of it I agree with, parts of it I disagree with. So if you look at, the actual experimentation, whether it's real experimentation or thought experiments that have occurred, yes, it's clearly patently evident, right, that the use cases in insurance, they lack characteristics for which the uniqueness of blockchain is not a good fit. But to say that it's expensive and inefficient, right? Well, it's only expensive and inefficient if you're not using it for the right problem, right? It brings you value. That value comes at a cost. If you're using it in spaces where that value is not important, then of course that cost will seem high and it will look expensive compared to the alternative. I think it's pretty clear that in situations where the uniqueness of blockchain, right, distributed nature and openness and transparency, so forth, when these characteristics are required, I don't think that we currently have a more cost-effective solution. In fact, it is pretty cost-effective. So I think it's a matter of how you look at it. If you're looking
How
at
you
it,
look at it, and I think that's fair. I think it's not like that's one of the reasons why we think it's not a dead horse, because there's some activity in the marketplace on both sides of the community, the insurance community and the tech innovation community. But I think it's good to maybe highlight a few examples, Samir. I think just to bring it home and to say, okay, many people are probably tracking this, but I don't know how many of them are tracking the breadth of things that we were able to bring to bear in terms of some real examples.
Yeah. I think it's definitely important to contextualize. To we've made the statement that it's proven to be ineffective in the experiments that have occurred. So, what are some of these experiments? So, there's a couple from travel insurance, flight delay insurance that I'm familiar with. Right, AXA had launched Fizzy, and it stayed in market for a few years, and then they abandoned it. And they abandoned it because, and this is by their own, admission and statements from their executive, right, that it did not reach its commercial target. Why didn't it reach its commercial targets? Because there was lack of demand, and they could not find the right distribution partners. So while they said that, okay, this product, we're killing it, they remained bullish on the relevancy of blockchain for parametric insurance. And in particular, the climate group at AXA is still looking into this. But noteworthy, right, is that it's really narrowly focused on the parametric insurance.
Yeah.
Other example that I'm familiar with, similarly, right, is Etherisc. They're out of Europe, funded by one of the foundations for decentralization of insurance.
And then just so our audience are clear, it's called Etherisc, right? Just like an Ethereum, but Ethereum with the risk with the C. Etherisc.
That's right.
European entity.
Correct. And we can put the links in show notes for folks to follow. So it's had a couple iterations. One iteration launched and failed, and it failed because they launched the product with no consideration to the regulatory requirements, and it just did not pass muster with the regulators. And the other sort of challenge they ran into is that at the time they did not have access to any kind of stable coin. So the challenge with that, maybe it's obvious, but very briefly, right, that you buy your tickets in euros or dollars or what have you, but then you have to turn around and get your trip insurance with a cryptocurrency. So there has to be parity, and stablecoin is supposed to provide that, but at the time they didn't have access to any sufficient stablecoin. So they went back and worked on this, and they've launched with a second iteration, and that's still in market. Although I did try it for a couple of my upcoming trips, but it didn't work. I don't know if it's limited to just European market or what have you. But my two observations, right, are that one, I cannot, buy trip insurance through them unless I have a crypto wallet already. So now, as a consumer, right, there's a hurdle for me. So I may just go to a traditional travel insurance provider. The other one, which is, because I work in insurance, I can make some of these inferences. It's attractive as a consumer, right, that it's $15 no matter what the trip is. But, you look under the covers a little bit, they chose $15 because... it keeps them right under the threshold where the know your customer regulations don't kick in. But more than that, right? What kind of insurance is going to last if it has a fixed premium, no matter what the risk profile is?
That's why I think it's an experiment that probably borderline called insurance, but maybe it's not even insurance. It's something else.
Yeah. So that's a couple examples, right, that are one is in market still, the other they killed it. There's also, right, Nationwide launched a proof of insurance partnering with the Risk Alliance from the institutes. They kept it in market for a little bit and then they pulled it. Why did they pull it? Well, they launched this purely as a mechanism to learn, and they wanted to learn in market. So they never actually had any motivation to improve customer experience or provide any kind of value. So they ran the experiment for a little bit, and they learned from it what they learned. And I don't know that they've even talked publicly about those learnings.
I doubt it. Although I've heard about it through my network, and some partners were involved, and I think everybody was gung ho at that time, but probably not even a big priority quickly.
Yeah. So the last example, and there's many others, but this is just kind of to root our conversation into some actual examples, right? Is the B3i, the Blockchain Insurance Industry Initiative consortium of insurers and reinsurers, the largest of the large, were part of this, 20-30 participants at its peak. They created this fluidity platform where they enabled two use cases. One was the write-a-block, which was for sharing claim data between insurers and reinsurers and trying to do it at a large scale. And the second was claim share, which was intended to provide fraud detection, right, where people try to get claim payment on the same incident multiple times. So those are the two use cases. This consortium has since been, insolvent, and at some of the, press briefings, the group CEO from Swiss Re, right, he commented that.
And then we should quote that verbatim because I think it has an insightful point of view there, right?
Yeah. So I mean, Christian Momenthaler, I don't know how you say his name. Hopefully, I said it right. He said that we would need an end-to-end view. It would need all insurance companies to basically create smart contracts at the beginning, at the origin. And then, in his comments, he sort of further noted that trying to experiment at the back end between the insurer and reinsurer, uh, right, this is where they had problems that you just don't get to the efficiency you need if you start with just that. So he also commented that to do this end to end, right, it basically requires all insurers to switch their IT systems to be able to create these smart contracts. So while they
Yeah,
had success at the back end, to get to the true efficiency, they needed to start at the origin, and for that, there's significant friction.
yeah. No, that's a good flyby examples, and I think what piques my interest is if you pull back and get to a strategic view of this landscape. I think insurance has certain characteristics, blockchain has certain characteristics, and I feel like they're kind of butting heads somewhat in the wrong way, uh, so far at least, based on the lack of traction in the marketplace. So, what I thought it would be productive to our audience is to kind of abstract these and say, what are these themes that are contradicting each other? And then maybe we touch on those, and then hopefully those themes are highlighting to our audience that they got to keep an eye on these themes. And as the dynamics on either side change, perhaps this will have an opportunity to make inroads.
Yeah, I think so. That certainly resonates with me as well. That there are fundamental characteristics in insurance, and while maybe on the surface there's compatibility between characteristics of blockchain, but as we've seen from these examples, and we reflect the contradictions and the antagonistic forces, they emerge. So let's
Right.
go through them, right? So uh, first one, I guess, is right. Insurance fundamentally, right, is a public good, and whenever we talk about public goods, right, it requires sort of oversight, governance, regulation, so forth. And just look at the origins of blockchain, right? It came out of the great financial crisis where there was disillusionment in regulation and all of that. So decentralization is fundamental to anything with the blockchain, right? So pretty
Yeah,
big contradiction here, right?
I think fundamental contradiction, isn't it? That there's a bit of a centralization and regulatory focus fundamentally, and then the decentralization is kind of like saying exact opposite of that. So maybe right, maybe that's just one of the to your point antagonistic characteristics that's emerging. But what about this idea that although insurance is a public good, although insurance is highly regulated, but still the entire ecosystem, from the consumer all the way to the whoever is holding that risk on the reinsurance side, the entire ecosystem is profit motivated, and there's also a pre-established trust mechanism within this ecosystem across the chain, and so it's very hard to break that chain holistically without any one of these parties feeling like their own existence in that ecosystem would possibly be threatened at a future point.
Yeah. That part certainly resonates with me, right? That I think yes, there is um, erosion in trust between consumers and buyers of insurance, of the carriers and providers of insurance, right? People go file claims and then they find, oh, their claim is denied, and then it feeds this distrust. So I think that certainly is there, but your comment, I think, is more broadly on the ecosystem as a whole. And I think, yeah, those trust mechanisms are there. And this lack of trust has not reached a crisis point where there's enough motivation for somebody to go create a parallel mechanism. And so, with all its
And plus, I
problems
think the
and
trust in the yeah, go ahead.
no. So yeah, with all the problems that we have, right? The bar that we have to overcome is so high that the existing mechanisms they don't allow it because they work.
They work, and I'm another view that I have is that the existing trust within the insurance ecosystem, and maybe true to a degree on other financial sectors like banking, etc., is that it's still based on the traditional view of a trust, and then the blockchain is more a systemic trust and programmatic trust, you know. So I think there is a healthy tension that it's trustless. That doesn't mean you can't trust it. If anything, it's highly trustable in the blockchain if everything works
Yeah.
fine. But somehow the insurance community feels that their traditional way of trust mechanisms is more trustworthy right now.
Yeah, and that is it, right? That it's trust between the partners or trust of the system itself. So
And then
yeah,
I think there's another element of data privacy too, right? I think there's conflict there that if you put it in the blockchain, then it somewhat at least exposes it to a degree to all the participants in the blockchain. Although there might be ways to skin this cat, and I don't want to go too far down that path.
yeah, I think that's another one of these fundamental contradictions that insurance, by its very nature, requires uh, all participants, right, to respect privacy rights and rights to data, so on. And with blockchain being fundamentally about openness and transparency, again, right, these are at odds. And while, like you said, right, this promise is there for having, non-public or permissioned blockchains, you're trying to now solve, right, the problem that comes with openness and transparency to meet the privacy and uh, protection kind of requirement. So if you don't value that, right, then why use it? Maybe go do something else.
Correct. Correct. But to our earlier point, it's not a dead horse. It's not also necessarily like, oh, it's expensive or inefficient in all cases. So maybe we spend the next 5 minutes or so talking about the hope and the opportunities here. That what are some of the use cases that sooner or later I think blockchain will probably rear its head in solving for, right?
Yeah, so I mean, as far as my point of view is concerned, right, there is still this promise of applicability of characteristics of blockchain, right? The decentralization or the trust aspect, the consensus aspect, right? The immutability that you cannot change information without consensus once it's there. So they are applicable in parts of the value chain, right? So we have examples that we just touched on, right? Proof of insurance or coverage verification. It can extend to verification of licenses. It can extend to background checks and ID verification, so forth.
And
There's opportunity.
we'll come back to that license verifications because I think there's an interesting dynamic there.
Yeah. There's opportunities in subrogation, right, where multiple parties are involved, and you absolutely need to look at who is responsible for what portion of the claim, and in a trusting manner they have to exchange information. So there's some opportunity there. Coordination of benefits is kind of an extension of that, or similar idea as subrogation, right? Um, Parametric insurance, right? We looked at Fizzy and Etherisc, and the promise that is there. I think the opportunity still is there. Um, Looking at claim history, right? We do this for on every claim you check, hey, what kind of claims has this insured submitted recently? So if you have a public registry of claims, or at least a uh, common registry of claims, even if it's not fully public, that opportunity is there. We've seen some success of a death registry. I think in Asia, it's being used across even jurisdictions across countries, sharing a death
Yeah.
registry. So I think these scenarios are still there, but it begs the question, right? Well, if the scenarios are there, then why aren't we making progress?
I think again, my hypothetical answer based on just research, understanding, talking to people, and just trying to collate all of this is still it goes back to those somewhat of these antagonistic characteristics that keeps coming back, either at the stage of ideating, and then like let's say an insurance carrier is like, okay, gung ho, nationwide, we're going to do a blockchain project, and they go through with the Risk Alliance, and then they go down the path, they roll up their sleeves and develop something, and then they realize that one of these characteristics rears its head, preventing them from maximizing whatever value that they thought they would get out of this. So either, in my opinion, some of them failed in after they develop something, or in many cases, they just thought experiment. They sit together, put their head together, and draw something in white paper, and they're like, no, we're not going to go down this path.
Yeah, yeah, yeah. I think kind of the comment from Group CEO of Swiss Re kind of echoes in my head, right? That if you start with spot solutions, yes, they'll be successful in their implementation, but they will not generate enough efficiency to justify the cost and investment. So the economic viability requires uh, broader and more widespread sort of adoption.
Usage, exactly, right,
Yeah,
across the entire ecosystem or the value
yeah.
chain. Yeah.
So I think maybe a quick, you know, uh, validation of this, right? Could be are there examples in either other industries where spot solutions with blockchain have worked, or with other technologies that have this same characteristic that it only succeeds if there's broad adoption, but if you do spot adoption, it doesn't. And I think as we
I,
were thinking about
I
this,
have
right?
not tried this myself. I have not neither have one nor experimented with this digital state ID. I have a physical state ID, nor I've ever been in a situation where someone used it on a situation. So I'm also puzzled and fascinated with this use case.
Yeah, yeah. So mobile driver's license, I think, is a interesting, comparison. And this has nothing to do with blockchain, right? It's just digitizing driver's license or state IDs, even. And states like Delaware or Maryland or Louisiana, Arizona, right? They started on this pretty early on, and they have uh, you know truly digital IDs that are available that you can put in your digital wallet. But the adoption has been low, and the puzzling nature of it, right, is that why is it? And I looked into it, right. So at this point, there's maybe 11 or so states that have formal adoption of mobile driver's license, and another 10 or 12 states that are in some state of implementing it. But there's a total of 5 million people across all of the states that offer it that are using it. So why not? Why aren't they using it? And I think one of the directors from a DMV office was commenting about this, that there's three challenges. Challenge number one is the chicken and an egg situation. Do you wait for the use case to emerge before you make the digital ID available, or do you make the digital ID available and hope that it will trigger use cases for its use? So that's one challenge. Second challenge is that, well, let's say I present my digital ID to a business that requires ID check. That business doesn't want to rely on this new risky kind of mobile ID because they have fears of I'm going to get sanctioned for selling alcohol to a minor, or because I accepted fake ID or of some kind. And then the third one, right, is that if you try to invest in this, you got to invest with some deep pockets, right? You got to keep investing before you reach the threshold of adoption, and then you can let the market forces kind of take this forward. So in Arizona, at least, right, what's happened is that the DMV has said, you know what, we're going to step in. That we will provide the digital ID and let the use cases kind of come. We will provide an app to do verification. It's a state-sanctioned app that you can use. So there will be no risk of, losing your license if you accept that ID. And then they are continuing to support this even with the low adoption because, they don't have a profit motive, right? Their motive is to get this to the threshold that's needed for market forces to take over. And then their plan is that then they'll step back, right? And then they'll let private enterprises kind of take it forward.
Yeah. So I think it's still it's still an evolving use case, and it mirrors some of the characteristics of blockchain and insurance that we talked about. There's a stuck between a rock and a hard place situation. But back to this question, like, why can't we explain it? And maybe that is the same situation we're in with blockchain and insurance, is that it is like still a why not blockchain or why blockchain, and then we're stuck in there. And then maybe there's some level of enduring optimism that it would resurrect. It will probably be in the periphery in the near future, but hopefully, kind of in a closing comment from my perspective, hopefully we summarize some fundamental and systemic challenges between these two things, right? Blockchain and insurance. And some of our audience may agree, some may not. But hopefully this will give our audience a perspective that they can take it and kind of share it within their community, and hopefully they'll feed it back to us on what's possible in the near future.
Yeah, well said, right? That it's hard to put your finger on why it's not succeeded, and if you cannot explain away, then the promise remains, and that's the enduring optimism here. Will it be a disruption, or will it be sort of this long journey, organic evolutionary progress that step by step it all looks the same, but 50 years looking backwards, you see big changes occurred? Who knows? But we're not in the crystal ball speculation business. Our intent was really just to kind of think through what we might learn from this. So hopefully something interesting for everybody listening in. Tell us how we did. What do you think? Have we missed something? Is there some aspect that is worth discussing? Would love to hear about it, and appreciate your support. Please like, comment, subscribe, share. We do this for you, and it energizes us when we see more people listening.
Yeah, awesome. Thank you, Samir. It was a great discussion. Until next.
All right, take care.
And that's a wrap for today's conversation on PremiumBytes, where we shine a light on the unsung world of insurance technology leaders. Thank you for joining us on this adventure and being part of our community. Don't forget to like, comment, subscribe, share, and follow us. Until next time, take care.